Hey everybody, Dave Rostello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today's guest is Jason Parr. He's the CEO of Peisner Johnson, a state and local tax consulting firm that's been around since 1992. Now, Jason has a really fascinating story. We're going to get into it a little bit today, but he actually started off as a staff assistant and worked his way up the ladder, becoming CEO at the firm. So we're going to talk about what that role is like. We're going to talk about how and when they niche down into salt and a little bit on their pricing as well, and probably so much more. But first, I just want to say, Jason, welcome to the show.
Hey, thanks, David. Great to be here.
Yeah, well, for folks not familiar with the firm, we said a little bit about, kind of the focus of the firm, but can you talk about maybe the size of the firm, just to give people an understanding of like how many people work there today, and then what is the kind of ideal client that you serve?
Oh, you bet. We have 25 employees. We've ranged anywhere from 15 to 30 employees over the year. Any seller in the US and Canada is really our primary client, and they can be in just about any type of industry because, especially since 2018, everybody has to deal with state and local tax, especially sales and use tax. And that's a primary area of our focus as well.
Got it. So because you specialized on that kind of line item, kind of opened you up to really work with a lot of different clients without kind of taking on too much, it sounds like, because you're specialist in taxation. Just really quick, 25 employees, how does that roughly break down? Like, is it 2 teams, 3 teams, a couple admins, or somebody in sales? Like, what's the organizational chart kind of look like today?
Yeah, we have an executive team, which is myself as the CEO. We have a VP of operations. We have a director of sales and marketing, and then we have some directors of departments. So we have a director of sales tax return services. That's a primary area of service that we offer. Then we have a director of projects. Projects would be more consulting related work, audit defense, tax recovery, performing voluntary disclosure agreements, research, tax law, et cetera, would be the project side. And then we have a small niche, also a manager over registrations and name change, address change, things like that you have to deal with.
Got it. And what is the cadence for meeting with that executive team? So you have 4 or 5 direct reports. Are you meeting with them weekly, monthly, quarterly? How does that look?
Every week. Yeah, I meet one-on-one with VP of operations every week. I meet with one-on-one with the director of sales and marketing every week. We have a reporting and strategy meeting for sales and marketing with our marketing manager, Ryan Johnson. Those all happen weekly. We also meet as a whole firm. We have a few offices and some satellite employees. And so we get together every Wednesday at noon to meet up as a firm and talk about the progress that we're making and cover some, just professional tips related to what we do.
Very cool. And that Wednesday meeting at noon, it's about an hour?
Yeah, it's 30 minutes to an hour, and it always includes everybody in the firm.
Very cool. Kind of related to that CEO question earlier, one of the biggest questions we've been asked is, what changes when you go from, being a VP or director to a CEO? And what I mean by that question too is maybe you're listening right now and you're like, oh, I have that title of director and I want to go to CEO. But, if you're listening, you're like, I'm running an 8 or 9 person accounting firm. I want to know what changes when you get to 15, 20, 25. I'm also speaking to you. So Jason, on your end, when you became CEO, what were some of the big surprises or learnings that you had to go through?
That is a really great question. I, as you said, I started out as a staff assistant 25 years ago, and it's been a long journey. And I've always done state and local tax. And so technically, from an operational standpoint, I would say I'm good at that. And we have a phenomenal team as it relates to that. But as you grow into management positions, not only do you have to be proficient in managing work, but you need to be proficient in working with people and managing people. And then beyond that, from an operational standpoint, I finally found as CEO, until you have a chief revenue officer, someone who's hyper-focused on sales and marketing, then that's where your mindset needs to be. You need to be focused on your brand, your messaging, how you grow the firm, how you grow your area, what you're doing from a director or senior manager standpoint. One of the things we say at Peisner Johnson is own the growth, right? So we want all of our clients to have a phenomenal customer experience. And if that's happening all the way down the line, without having to outwardly do it, members of the firm are owning the growth through relationships. Every time we meet on a weekly basis, we have every person in the firm in rotation share what's a favorite account, a favorite contact, a favorite project, or a favorite process that has been developed. They talk about that, and then we elaborate on that as a firm and discuss some of the professional tips associated with that. But in the end, what we have found over the last 2 years serving in this position is every time someone talks about a favorite account, contact, project, or process, it almost always relates to the relationship in the individual. And we have said often here that collaboration builds confidence. Nobody really likes to go it alone. We have a tendency to think we want to go it alone, and we want to prove ourselves and show that we can accomplish something. But you always have greater confidence when you're collaborating with someone else. So even myself as CEO, I don't make any major decisions without collaborating with our executive team. And so there's always a process of counseling with or collaborating with someone else that always gives you confidence, those nods of approval as you move forward in a certain direction. So when I thought of my role as CEO, I still felt that this role was make sure that all of the operations and the strategic efforts for the operations, continue to grow and develop. But what I'm finding now is it's all about relationships, both with employees, with your executive team, with clients and partners of the firm. And then it's focused on messaging and your brand. And you've got to wake up every morning considering what that is, what you love to do, who you love to do it for, and then you've got to work to chase that. To me, that's the CEO role in a small firm.
Yeah, what's interesting, in our interview base too, it feels like the folks that have broken through that got $1 million a year or maybe 10, 12 person firm kind of ceiling were the ones that, even though they maybe were not a full-time CEO at that point, they were still wearing many, many, many different hats, but they took some percentage of their time to think about brand, messaging, ideal client, and it really helped them transform to a place where they could be a full-time CEO, or like what you went through, hire somebody to be that full-time CEO.
Absolutely.
I haven't seen it where somebody just woke up one day and said, "Oh my gosh, we're 25 people and we make all this money." And it's great. I think this is some of the early planning that has to go on.
Yeah, it's a full-time effort, no doubt.
Yeah,
it just doesn't happen.
Yeah, and how did you land on your brand? So I had a chance to obviously look at your website beforehand. For folks watching video, you're wearing a flat brim hat. It has a really cool logo on it. I did not expect this kind of like brand feeling when I went to your website. It feels very kind of personable. It feels very modern. How did you land on this? Because I don't see this every day. So I'm curious of the process you went through to land here.
Yeah, it's interesting. We a few years back, probably several years back now, one of the things that we started liking, both internally with the firm and also externally with clients and partners, is people like what we call swag. And so we started making polos with our logos. We started making hats. We had trucker hats, and we had tumblers and all sorts of different things like that. And then we started, it's interesting, within our executive team, everybody's really close, right? We're focused on this concept of relationship, and it's not just about being nice, right? Though being nice, being kind is important, but there's a genuine relationship amongst the executive team and what we call the firm family, right? And so that kind of permeates, but we got a lot of people that like hats, really like a simple, sleek logo, and we just through some collaboration started determining what kind of swag do we want to have out there and what do people like to have. And I'm a little bit surprised. I mean, I love the flat brim hats. I have a big head. They look better on a big head. but we have gotten a lot of compliments about just our approach. And it's not just what we wear and what we look like, but in our interactions with people, right? So we'll talk a little bit about what we call a what's next call. But one of the things that Ryan does is it's not a sales call, right? It's truly a what we call a discovery call. And at the end of it, we make some recommendations. And if we've educated you on some concepts and given you peace of mind as it relates to sales and use tax, and you don't need our services, we're perfectly happy because you have more confidence moving forward. We really believe in this concept of collaboration, the idea of we over me. That we together can accomplish more than just the individual. But I think the branding has been interesting because we don't necessarily fit the accounting model or stereotype, but that's just because we're just ourselves, right?
Yeah, and how did you? Was it always the case where you were experts in salt, or is that a strategic decision in the last couple of years to double down on that?
So it's always been state and local tax ever since I joined the firm, but there has been some strategic moves in changing what we do, right? So we started out doing a lot of tax recovery. That's a big deal in sales and use tax, finding where someone's overpaid tax and getting refunds back for them from the states. We were doing audit defense, and we began to realize that to grow a firm and to provide continued opportunity, and also to have a perpetual revenue source, that this project work couldn't be the only focus that we had. So our move into sales and use tax returns, other consulting and research, doing what we call nexus studies, risk assessments, helping people get compliant through amnesty programs and VDA programs. All of that was probably about 15 years ago that we started to make that turn. And that was a real focus of one of our founding partners, Andy Johnson, who's very marketing minded. But that's where we began to move in that direction.
Got it. So tell me a little bit about this what's next call, and why do you call it that, and what do you cover, and what questions should our audience be thinking about when it comes to salt and all those wonderful things?
That is a perfect question. So we have this, I call it a cheesy term, but it's just so straightforward and simple. It's called a what's next call, which is a completely free consultation. And the purpose of the what's next call is to answer the question that most prospects, clients, CPAs, accountants, bookkeepers have when it comes to state and local taxes. What do I do next when I learn a little bit of information, right? It's the most common question. And we make recommendations on what to do next. So it's I call it a discovery call. And the purpose of it is specifically to answer three, what we consider to be the most vital questions when it comes to sales tax. Because of Wayfair versus South Dakota in 2018, the Supreme Court case, it used to be this term nexus, meaning where I do business was related to where I was located. But now, because of that court case and the decision that was made there, it's all about where your customers are located. So there's been a huge flip. And so we believe there's probably every seller in the US and Canada, especially the US, probably needs to register in more states than they're currently registered in right now. And they need to know that, because we call sales tax a margin tax or a margin killer, right? So if you had a responsibility to collect tax at the time of a sale and you didn't, and the rate of that tax was 8% or 9% or even 6%, and 2 or 3 years down the road, the state came in and determined that you should have been collecting that tax and you weren't, then it comes out of your own pocket with penalty and interest. So it could be 10% or more. So if your margin on your company is 10% and now you have to owe 3 years of sales tax that you didn't collect, that's got to come out of your own pocket. Not only is a margin killer, but it sometimes can ruin companies and put them out of business. So Paul Johnson, our VP of operations, says the most costly mistake you can make is to ignore it. So you need to answer 3 questions. Do I have nexus? Number 2, is what I sell taxable? Because not all items are taxable. And then how do I sell my items? Meaning, do I have the responsibility in the advent of all this new legislation for you to have a responsibility to collect tax where your customers are located, not where you're located. There's these marketplace facilitator laws that have passed in addition to that. And so in some situations, the marketplace is responsible to collect and remit the tax. And in some situations, the seller is responsible to collect and remit the tax. So if you're a bookkeeper or an accountant, you obviously have clients that are conducting business in the US and Canada. The questions that need to be answered are, does your client have nexus? Is what they sell taxable? And how do they sell their items? The answer to those questions will determine whether they have a responsibility, a tax responsibility to collect and remit tax on their sales in multiple jurisdictions. And so our what's next call is not just for sellers who need answers to these questions, but it's for CPAs, accountants, and bookkeepers. So they can just sign up for a call. We can talk about their situation and we can give them some background on these three questions, and that may help them understand what situation their clients might be in.
Yeah, and I love the framing and the positioning of this call, right? It's like you said, that brand experience carries the whole way through. So you have this kind of very personable, friendly, if you will, kind of brand experience. And then instead of having a classic consultation, which is a totally fine word, you know, in many contexts, but you want to deliver experience that is unique to your firm, that sounds a bit different than the other accounting firms over there. So you call it a what's next call. And so just all of these little elements, I think, add up to creating a very unique experience, probably for your client base. I would cry if I didn't ask you this question because I love it so much, and we didn't end the call. So tell me about how you price these services. How do you come to market and deliver state and local tax services? You mentioned you have some one-off work. I think prior you mentioned you have subscription work. Talk to me your approach to pricing and how you put these packages together.
Well, we learned several years ago, probably about 5 or 6 years ago, we moved away from hourly billing to value pricing and now what we call subscription pricing across the board. We do no hourly billing. As your audience, I'm sure knows, when you propose work on an hourly basis, and you say it's going to be 30 to 40 hours, the prospect is thinking, or your client is thinking 30, you're thinking 40. If you give them a price range, they're thinking the low price range, you're thinking the high price range. There's always a conflict at invoicing time. And then you almost always have individuals who are slow to invoice as well. And so there's always this just negative experience that the clients have and that you have. So on all of our project work, it's what we call value pricing. Project work, again, is tax recovery, audit defense, voluntary disclosure programs, things like that. It's all priced up front. You know exactly what we're going to do, and you know exactly what we're charging for it. Both of us agree up front, and we require payment up front. And so everybody's happy in that situation because everybody's in agreement to what they're going to pay. On the sales tax return side, we do about 50,000 returns a year for a couple hundred accounts. On the project side, we have at any given time about 100 open accounts that we're working. And so on sales tax return services, what you see in the industry is per return pricing, which is an okay model, except you fall into the same rut. Number one, they put you into a long-term agreement that's difficult to get out of. So we're not into any long-term agreements. Our agreement is month to month. They charge you per return. They want the fee for the year up front. And then at the end of the year, you have this true up process. And it's the true up process that creates the negative experience. It's also the, hey, we're moving in another direction. We're going to change providers. Oh, sorry, you're already past the renewal, so you're stuck for another year. That's always a negative experience. So we're trying to avoid negative experiences. So we charge you a fee per month for every state that you're registered in. And that's your flat fee every month. And it doesn't just include preparing and filing the return and making payment on that return. It includes ongoing consulting and research. We're accessible via email or phone call. We want you to reach out when you have questions or situations that come up. We handle notices and other issues. We call it state taxes handled. It's a full scale, essentially outsourcing of your department, but it's at a price per jurisdiction where you're registered and you have Nexus. So that fee, let's say it's $1,000 a month to process all of your returns. That's your fee every month, as long as you're a client. And so we don't charge that up front on an annual basis. We charge it, invoice it on a monthly basis, and it's a subscription. And the subscription, as you know, subscriptions, the term subscription works really well because it's inclusive of not just the service that you're trying to buy, but it's inclusive of a host of services that are related to that subscription. And we have found that our clients absolutely love it.
Yeah, I obviously love the model. I think every client that any firm wants to work with, I think in theory should be fond of the subscription model. It adds a lot of confidence and consistency to the investment they're making. I'm really curious, what is, and it sounds like could be a broad range here, so take it whatever way you want to, but what's the average client paying you per month or per year in a kind of a subscription package environment?
Yeah, our subscription packages, we have a minimum of about 500 a month, and it could be anywhere up to 5,000 or so a month, depending on the number of accounts and number of services that we're providing. Sometimes when you think of sales tax, you're thinking, well, it can only be 50 states, right? Well, not all states collect tax, and you probably don't have to be registered in every state. The problem that you run into is there are several hundred local jurisdictions in a few states that can create quite a nightmare from a compliance standpoint for companies. And so we offer those subscriptions on levels as well. So you could have a basic level, you could have a middle level, so to speak, and a premier level, which includes audit support, additional state tax reviews and things like that are on an ongoing basis. So that's kind of the range on the subscription side. Project work could range anywhere from a couple $1,000s all the way up to hundreds of thousands of dollars, depending on the type of work and the situation that you're working on.
Yeah, for those value-based pricing projects, how much time is spent scoping those out? Probably in the old world, it's like, yeah, it's $300 an hour. We'll keep billing you 2 weeks until it's done. You almost don't need a lot of scope up front. I mean, you need some, but now with value-based pricing, seemingly it's a lot more. So I'm curious to see what that difference is.
Yeah, that's a great question. So it's never based on time spent. What you can have is you get into a rut of time spent. It's the old fashioned, if you have a plumber come out and he charges you $200 to solve a problem, but it only took him 5 minutes to figure it out. You're like, well, that only took you 5 minutes. Yeah, but it also took 30 years of experience to know what to do in those 5 minutes versus your situation. And so value pricing is all about the value of the work that's being performed, not the amount of time that's involved in doing the work. I think that's a really important distinction people need to understand. But number two, how we scope that out is we have what we call a value council. And so we get the project leads that are going to be involved in the project during the sales process. And we have, now we shorten it to a VC. So we have a VC. Those used to take an hour, 2 hours to kind of get your heads together and figure this out. Now it could be 10 or 15 minutes, right? We know what service we're offering, what we're doing, what the situation is, what the potential outcomes are. And that is a 10 to 15 minute VC. It doesn't always include me. A value council. We get the people together to collaborate on what the price of this project should be. And then the value council includes a sales rep, potentially a marketing rep, the VP of operations, director of sales and marketing, and the project lead. And they're essentially trying to pull information from the project lead and occasionally myself, depending on the situation, to understand what should be the cost of this project or situation. When it comes to subscription pricing, we've modeled that out enough that we have some standard pricing that we can present without needing to hold a value council. So value council is usually on project level work that, it could be an audit defense that truly might require $100,000 fee to accomplish dealing with the audit. and so you really have to think through what are the processes that are going to occur.
Yeah. Well, one of the biggest fears I think people have when they move to subscription, move to value, is really around not knowing what the margins are going to be like. Everybody talks about, well, subscriptions, they should be better, value should be much better, but there's security in knowing that the hourly is the hourly, and there's certain margin built in, and in theory, you should never pass it. So when you made that switch at the firm, what impact, if at all, did it have to the profitability or margins to the firm?
Immediately up. Immediately.
Like what? Like a point, 10%? I mean,
So we can honestly say that we function at about a 35% profit margin, which is good in the accounting world, because that includes, 2/3 of our work is subscription. Pretty significant. Before that, I would say our margins were probably closer to maybe 20%, maybe 15%. It depended, because you have these ups and downs in the type of work that we do from a project standpoint. But what you found was people always, because there's this conflict in the work that you do, the hour that you spend, and the time that you bill at the amount that you bill, that people are working far more hours. So they might be working 3 hours to bill the 1, because they're trying to get a certain amount of work done. Or you get in, and then you're still going to have an argument with the client that they've been overbilled, right? So you have people working far more to accomplish the net result. And so value pricing almost immediately created a far better client experience than we had previously, but it also created a huge increase, a positive increase in employee experience.
Mm-hmm.
All of those processes to bill, to invoice, to log your work, and you were constantly having to prove what you did, and that's really stressful for your staff. And so they don't worry about that anymore. We're much more focused on get your work done, not how many hours did you spend doing your work.
Got it. Yeah, that was going to be my follow-up question. Like, are you tracking time at all just for a productivity standpoint, or is it really about monitoring project load or job load, or like, do you do, like, how are you managing employee performance then if it's not for the classic timesheet?
Project load. That's it.
Yeah.
No more timesheets. Nobody clocks in or clocks out. You have a direct report.
Do you think about budgeted time and capacity planning, or is it just like we have a general sense of how many projects each employee should have, and that ratio should be somewhere in this ballpark, and that's how you look at it? Or are you budgeting out capacity?
Yeah, you when you're looking at your project flow and your project management and workflow, and we've been steadily increasing, at least in the last 2 years, 25% growth each year. And so that's significant. And so we obviously have to look at project management, workflow, and how many projects someone can, really work on. And one of the things that Paul Johnson's been working on is our workflow processes. And so being able to understand the aspects of each project and how much someone can do, steps, processes that an average person should be able to do. We've actually begun to develop trends so that we can honestly say when we hire somebody at what level you ought to be able to do a certain number of processes related to this project work. And then on the subscription side, the returns, it's got a very distinct workflow. And it's not even the number of clients that an individual staff or manager or senior could manage or review or oversee, but the actual number of returns processed. And so there's a focus on, because it's very specific, and you could almost very accurately determine the number of returns that someone could actually process and file in a given month. And so that's how it comes down to when we need to hire and when we need to boost teams, et cetera. Occasionally you have surges on the project side, because you could be working an audit defense that's requiring, a lot of effort, and then it ends, and you've got to move people around on other projects. But it's becoming, from a workflow standpoint, Paul's doing some incredible things in being able to manage that workflow very effectively.
Great. Well, I will sign up Paul for the podcast.
Yeah, you should talk to Paul.
That could be a lot of fun too. We're a bunch of workflow geeks over here. So Well, Jason, this has been great. We covered a lot of ground here today. If somebody listening wants to reach out, say thank you, learn more about what you're doing, what is the best way for them to connect with you?
So we've just created an easy, simple way to reach us. It's pj.tax. And that will actually take you to a what's next form on our website. You don't have to stay there. You don't have to fill that out, but that's the easiest way to get a hold of us. Or if you want to have a what's next call to talk about some concerns you might have, we're always happy to jump on a call and talk with you. There's literally no cost there. We really enjoy developing relationships with other people in the industry.
I love it. So that's pj.tax. Go there, go to the what's next call. If you're driving and you couldn't write everything down, you couldn't write down the tips and the tactics and the frameworks or the URLs that Jason mentioned, you can always go to the jetpackworkflow.com/blog. We'll do a full write-up of today's interview with all the links. And if you enjoyed today's interview, leave a review, help us get the word out about the podcast. And if you really love today's interview, share it with a fellow firm owner that needs to hear something like today's interview. Jason, it's been a real pleasure, and thanks again for coming on.
Ditto. It's been great. Thanks, David.